You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Tuesday, the 29th of May, 2018. Remember, markets are closed on Monday for Memorial Day. What do we see? How did the week end up? Well, on Friday, we saw the S&P 500 down 0.25%. The NASDAQ 100, that's the Qs as we fondly call it, was up 0.10%. And we had a weekly vertical crossover going up. We see TLT 20-year bonds was up 0.62%, and we had a weekly vertical crossover going up. And gold was down 0.31%. First, let's jump into the S&P 500 as represented by the exchange traded fund SPY. We've gone through our third week of decent up movement. First 2 weeks stronger than this last week. Not enough momentum to make the price percent oscillator crossover going up. Derivative oscillator did. We see that our weekly chart is still in a confirmed down move. Not enough up movement. Primarily when you look at the candle, this week it topped out about where the prior week's candle had. So again, and about where the week even before that, that's the week ending the 11th of May, where it topped out as far as the wick goes. So again, not a lot of strong up movement over the prior week, not enough to pull that price percent oscillator over. We look at the 2-day chart. Price movement, of course, has broken through that 3 days back. The first day of the latest 2-day candle is pretty much a spinning top, means almost a doji, means lots of indecision tending up, but we see the price percent oscillator is pretty much flat, derivative oscillator losing upward momentum. We look at the 4-hour chart. What do we see? Still in a confirmed down move, has been since it crossed over going down in the afternoon on Thursday, the 17th of May. A lot of sideways action, a pop-up here and there, but again, also pop-downs. So again, trending down at this point on that 4-hour chart. So we don't have a crossover there, waiting to see things flesh out, either up or down. But when we go back to the weekly chart and we head to the Qs, very interesting, my friends. What do we see there? Well, we see on the Qs a confirmed vertical crossover on the weekly, not super strong. We would like to see that blue a lot more apparent, but it does appear as we focus. I mean, when you have to do that, when you have to really, really focus in like a microscope, yes, it is technically a crossover going up again. We will pay very close attention Monday morning at 10:30 after idiot hour, after the markets settle out. Tuesday morning, after the markets settle out, after the Memorial Day weekend, and see just how strong that crossover actually is. Again, it topped out just a little bit above where it had been the prior week. We do see the derivative oscillator gaining momentum. Price percent oscillator started losing momentum all the way back on the 13th of April and has continued to lose it until it crossed over this last week positive on the derivative oscillator. So we'll keep our eye on things. We do have the 2-day and the weekly now moving in the same direction. Let's look at that 2-day chart. Of course, it crossed over going up back on the 4th of May and really went up the next 6 days and then started sliding sideways since then. And only with this latest candle have we really seen some strong up movement. And remember, it's only the first day of the latest 2-day candle, and the derivative oscillators continuing to lose upward momentum. Price percent oscillator still heading up. So again, on Tuesday, we want to be careful as we go to the 4-hour chart. Wasn't enough strength to actually cross over at the end of the day. Derivative oscillators gained momentum, but the price percent oscillator didn't cross over. Want you to pay close attention on Monday morning at 10:30. See if you see things. You can look at either the 30-minute chart around 10:30 and see if it's heading up, or just wait until noon and see if you have a green candle up. And if the 4-hour chart's crossed over going up, and if indeed it has, you may very well want to jump into that up move. We shall see. Nothing's written in stone. And again, the charts guide us. We don't just willy-nilly go in and do a virtual trade, go into and buy either a virtual call or just note on your trade worksheet. Remember, hope you're using those every time you do a practice trade. use a trade worksheet, fill that out, and of course, make sure that you note why you got in, what the candles were, everything that's listed there on the trade worksheets. Those are available for free at the website. And of course, you can buy your trader journals from us. So again, pay close attention to that, my friends. We're going now back, so keep your eye on the prize on Monday morning for an up trade in the NASDAQ 100. And I said Monday morning, forgive me, Tuesday. Markets closed Monday. Now, we also have a weekly vertical crossover going up with an immediate switch back from the prior week. We now have things switching back over going up on, it was going down, if you recall, last week. Again, these markets are sliding sideways, and we've seen it flip back over. It doesn't make me feel real comfortable for a couple of reasons. One is that it happens so immediately. Two is that the derivative oscillator is still negative on the weekly chart on TLT, the 20-year bonds. That is of concern. Also of concern, but again, something important to note. You notice that the 2-day chart, we're going to go to that and tell you what's happening there. It's only the first day of the latest 2-day candle. So again, lots of trepidation there. That candle will not be drawn until the end of the day on Tuesday. Still in a confirmed down move because we don't call a candle until it's actually drawn. But there was strong up movement, as you can see, over the prior 2-day period. That was the 2-day candle ending on the 24th of May. And then on Friday the 25th, we saw lots of up movement in bond price there on, well, the exchange traded fund, TLT. We saw strong up movement there. So again, there's a lot of caveats for this potential trade. Got to be strong up movement on Tuesday that's paralleling a change in the 2-day vertical crossover. And also, you're going to have to go. So again, on this 2-day chart, first day of the latest 2-day candle, we do see a crossover occurring. Price percent oscillator going up, derivative oscillator gaining momentum. Then we go to the 4-hour chart. You can tell that it crossed over strongly going up on, let's see, that is on the 22nd in the afternoon. Of course, the next morning on the 23rd, we've had just spiking up candles since then. Lots of up movement on Friday morning, and then not so much in the afternoon, but again, still up movement. Derivative oscillator is climbing, just looks like stair steps. Price percent oscillator spiking up also. So again, watch for things on Monday at 10:30. If things seem to be going in the same direction, at least do a practice trade and see how that works for you. Noting on your practice trade worksheet the problems that we discussed. The 2-day chart has not qualified its crossover because the candle hasn't changed, and the weekly chart is extremely weak. That's the weekly WEEK versus the week crossover, that's WEAK, primarily because the derivative oscillator is still in the negative. So keep that in mind, and again, just see how it works. That's why we do these practice trades, and that's why we notate them, so that we learn by doing, and we learn from mistakes in practice trades, and we learn by things that work in practice trades. Okay. Back to the weekly chart, and lastly, we go to gold, down for the day 0.31%. Now remember, gold over the last 5 weeks, down 4 of those, and the up week, which ended on May the 11th, was not a strong up week. It never penetrated our weekly trend line. Things are just continuing to move right down that weekly trend line, of course, still in a confirmed down move since the 16th of March. That's a long way back. But these last 5 weeks, we've seen continuing down movements there. Derivative oscillators gaining momentum. Price percent oscillator still heading down, not at the same strong rate. 2-day chart, what's going on there? Well, the latest 2-day candle up 0.62%. And we see the derivative oscillator continuing to lose downward momentum. Price percent oscillator is actually heading, well, it's actually more than flat. It's heading up just a little bit. And we have a green spinning top for the prior 2-day candle ending the 24th. And the first day of this latest 2-day candle is a green open box candle, no wick on the bottom, wick on top, which of course typically means stronger movement going up. Don't have a crossover yet, so still a confirmed down move on that 2-day chart. But take a look at the 4-hour chart. Very interesting. What do we see going on here? We might see the makings, might see the makings of a down move at the beginning of this next week. Why? Well, we see that gold has pretty much topped out somewhere around the 123.65 mark or so. And we saw that on the 24th of May, and we've also seen it on the 25th, and actually ended the day with a doji tending down after a red open box candle in the morning on Friday. Maybe gold has topped out. We shall watch the 4-hour chart. If indeed it does crossover going down, the 2-day stays in a down move, and the weekly stays in a down move, then of course we may very well jump into that down move. So that's where we are, folks. That's how we end the day on Friday, in the week, go into the Memorial Day weekend, looking for some possibilities of trades over the course of this next week. That is the Qs, weekly vertical crossover going up, TLT, weekly vertical crossover going up, and gold, waiting to see if this 4-hour chart's going to crossover going down sometime during the next week. If it does, it might give us the ability to short gold. So that's where we are, my friends. If you've not already purchased our book, you will see on the top right of the video right now, hit that link. It will actually take you to the video that we've done telling you all about the book and a link where you can purchase it. It is Charting Your Way to Wealth. That is what we are all about, and we very much want you to have a copy of it because it is what explains everything that we do here. I'm sitting here with a stack of the books, sending them out to all of you who've purchased them in just the last couple of days. We have the second reprint in already, and we are sending those out over the Memorial Day weekend. And if you want one, please support us here. You want to know what it is we do, how we do it, why we do it. It's all explained in our book. We made it as concise and as forthright and as simple as it needed to be, as I would have wanted it to be when I was first learning how to read the charts. Put all of our knowledge into that. God bless, my friends. Please help us out. Purchase it. You can find the links to it at that video. You can also find the links at the website, chartingwealth.com, under our daily and weekly reviews. There are links there, and also at our YouTube channel. Please subscribe to our YouTube channel and subscribe to our daily market review at chartingwealth.com. It's free. It'll come to your box emails every day. God bless. All the best from the whole team here at Charting Wealth World Headquarters.